I think in the painting industry, there are companies that don't do selling. They really just do estimating, and they're just kind of an estimate machine, and they're just pumping out bids. And I think they're missing opportunity to actually sell and move decisions.
Welcome to the Painter Growth Podcast, where we help you scale your painting company in record time. Join us as we explore sales, marketing, hiring, finances, leadership, and more, everything that you need to know to scale and grow your painting business. I hope you enjoy and subscribe. What is up, everybody? Mike Gore-Hickman here, founder of PainterGrowth.com, and you're listening to the Painter Growth Podcast. And today I have a really exciting guest. Well, exciting depending on who you are. If you're not into mergers and acquisitions, selling your painting company one day, then you might not find it exciting. But if you are interested in enterprise value and eventually selling your painting company, then my guest today, Haakon Hansen of Aleph Holdings, will be just what you're looking for. So what is up, Haakon? Good to have you, man.
Hey, Mike. Thanks for having me, man.
Yeah. So just for clarity, you worked with Jason Paris at Paris Painting, basically the OG sales rep outside of ownership. And now you are the responsible for business development at Aleph Holdings.
Yes, sir. Yep. So yeah, started with Jason back in halfway through 2017. So he was starting to scale, and they needed somebody, and I hopped in there. And so been along for the ride of Paris's growth, and then as Aleph has gotten off the ground and been doing other things, have navigated over to that's where I spend my time these days.
Amazing. So how did you get into the painting industry to begin with?
Yeah, so I have a background in accounting and finance. So I worked in corporate finance for a few years, and if anybody knows Jason's story, Chet Funk is a gentleman that he partnered with at the end of 2016, and then now Jason and Chet are part of Aleph, and myself in there too. But so whenever they partnered, I knew Chet, and so as they were starting to scale and grow, they were looking to bring folks onto the team, and connected with Chet, connected with Jason. And jumped on board.
So definitely not the traditional path to becoming a painter. Took the business route.
No. I have I have some family members who have a little bit of a blue collar, mostly blue collar actually. My dad's a heavy equipment operator. My grandpa owned a construction business. So I was around the trades enough to be comfortable with it, but personally, very, very little trades specific experience, and none really in painting.
Cool. So let's fast forward to you becoming the first sales rep for Paris Painting as you guys were beginning to scale. What was that like, and what did you learn about the painting industry and about systems in that role?
Yeah, I think that I think the importance of process, certainly, right? So I definitely had a big intimidation factor of, if I'm talking to a homeowner, what if they know more about painting than I do? And I think getting in and getting reps, understanding, particularly when it comes to sales. And I think in the painting industry, there are companies that don't do selling. They really just do estimating, and they're just kind of an estimate machine, and they're just pumping out bids. And I think they're missing opportunity to actually sell and move decisions. But I think seeing that those two things are different, and that, if I had a process around sales, and I knew how to connect with people, I knew how to understand, their motivations and what their goals are, and how are they making their decision and choosing their painting contractor, that would take me a long way. And it's just kind of a matter of reps of learning the paint stuff. And so that was really helpful, just to learn that. And I think as we've done different things within Aleph, I think I've learned that too. Most things are not super complicated if you're able to kind of commit to establishing a process and being consistent, you can accelerate your learning pretty quickly.
So what types of processes early on the sales side of it did you find were helpful in terms of improving your close rate?
Yeah, I think one of the big things in our group, and I think coaching. So just specific one-on-one coaching is huge within like the Aleph culture, and then that has roots back to the Paris culture. Jason and Chet, and then eventually Alex. Kalaf, who's now the Aleph COO, came aboard. So I think just having meaningful events where you're analyzing what you're doing. You're having somebody else look over your shoulder and listen to the things that you're saying to a homeowner. Watch the process that you're carrying out as you go through an appointment, and then giving you feedback. And that's vulnerable, and it can be intimidating, and you get in your head whenever somebody's there. But that really helps you capture and see things that you otherwise wouldn't.
Mm-hmm.
And so and kind of put something down to work on, to refine. So I think that commitment to coaching and just making the time for those events was huge.
Awesome. Yeah, I mean, couldn't agree more with adding coaching as to any business will absolutely propel them. Let's fast forward a little bit and just jump right into enterprise value of painting companies. And what I mean by, I'll let you define it. What do you mean when you use the term enterprise value of a company?
Yeah, I mean, there's layers to valuing a company, right? And I think so. Just to explain, so like today, Olive does joint venture partnerships with other painting companies. So, what we do is we partner with other painting companies. We become equity partners, and we do a joint venture. And the goal of that is to help them grow, help them stabilize. And so, my role in Olive today is on the partnership development side. So, I connect with painting companies. Share with them what we do, what we've done in the past, and how we can help companies. And then we go through a discovery process to see what are their goals, what's the state of their business, and is Olive a potential option as a strategic partner to help them get there. And so through that, we go through a acquisition, a transaction. And so we look at valuing a painting company. So I do this all the time. And the reality is there's some parts that are simple, and there's some parts that are not necessarily complicated, but have nuance to it, right? So, and I think that for all painting companies, whether they want to, like, whether an immediate exit is imminent for them, I think there's just good sound business that understanding if you own a company. Top line revenue is not the only thing that you should think about. And then not even necessarily, net income. Obviously, both of those things are vital and important, but there's other elements that you should really be considering in terms of how you think about your company and what you're paying attention to, because those are things that grow the value of the company, that can open up all kinds of doors for you down the road, or in the more immediate time. So I think it's something, for every business owner to consider. And then obviously for us, we're looking for good partners. And so, these are the things that we look at internally. And then
good partners, meaning like a good operator, a good kind of general manager, current founder, CEO, business owner, that you can come in, you can purchase a percentage of their company for whatever, say 1 times earnings, grow it, add systems, and then sell it to someone else later on for like 5 times earnings.
So in our particular case, there's all kinds of different strategies out there, right? So there's some more traditional private equity is you are coming in, you're purchasing a company, you're trying to grow it, and then, push some metrics that are meaningful for that industry over the course of a 5-year window or something like that, and then sell it and kind of get a payout. In our particular case, our strategy is more of a buy and hold. So, and part of that is driven by the industry that we're in, which is I think something for painting company owners to reckon with. That the reality for painting companies is they don't sell for a ton of money. So this is not a tech industry. This is not a medical device industry where you can get a huge multiple on your income or a huge multiple on your revenue. If you go to a business broker, typically, and just like if you go to a real estate agent, you go to 5 real estate agents, you might get 5 different prices that you can sell your house for. But generally speaking, a painting company is going to sell from somewhere between 2 to 4 times the net income, EBITDA, earnings before depreciation, interest and amortization, or seller discretionary earnings is another term. They mean slightly different things, but effectively for simplicity, 2 to 4 times the average net income of a business. That's just it's not huge, multiple, right? Compared to other industries that can be 6 times, 7 times, 8 times EBITDA. Right. And so therefore for us, selling is not something that we are particular keen on. But that being said, what's great about painting companies is that they can be very profitable. So like from a return on your cash, they're typically not very cash intensive. So it's not like you need to go, get $1 million loan to start a painting company or to buy some crazy equipment. The equipment is very inexpensive. Obviously there's some cash that needs to go into marketing and investing in people, but relatively not super cash intensive, but they can be quite profitable. And so if you can really scale your business and do so in a way that allows you to stabilize that business, painting company can be an excellent source of passive income.
So what would be your criteria that you look at when it comes to assessing an opportunity to invest in?
Yeah, so this is something that we look at, and I'll note too, internally, like once we have partners, this is something that we're looking at every year. And so there's kind of 5 core factors that we look at. So, prospective partnerships that we're looking at and evaluating and in conversations with, but then also just internally year to year, we track these 5 elements just to make sure that we're growing the value of the equity for the shareholders, that we're being successful in what we're venturing out to do. And so I'll just, if it sounds good to you, I'll just run through, here's what those are and why they matter. Does that sound good?
Yes.
So one, just the org chart. So kind of what's the state of the state from a people standpoint. And this is where, I mentioned a painting company is typically going to sell for somewhere between 2 to 4x of net income. Well, a good question should be, well, what gets you 2? What gets you 2.5? What gets you 3? What gets you 4? Right? And those get into a bit more of kind of qualitative factors that really make a company more stable and more appealing to a buyer. And one of those is the people within the organization. And a big part of that is how many people are there, really. And what that means is, like, how centralized is the value of the business. So what's very common in our industry is you have there's a lot of owner operators out there, and everybody who starts a business, that's inevitable if you start a business for the most part, right? Jason was an owner operator in Paris Painting for a number of years, so that's kind of a rite of passage. But if that's the position that you're in, and you are trying to sell your business one day, that's challenging to a buyer, because you essentially are the business, right? So in terms of like, what is a buyer buying? Well, they can't buy you as a person. And so in terms of if you are, there's not really a sales process apart from just your personality or your style. There's not really a project management system outside of what's between your ears, right? Like if to the degree that the business is really wrapped up in an individual, that's challenging. And so for us, we're big traction people at Aleph. So the book Traction by Gino Wickman, he lays out the entrepreneurial operating system, EOS. It's phenomenal. It's a very boring read, but that's what makes it so good. Is it's simple, it's actionable, and so we look at like the org chart that he lays out there. You got to have leadership, so a visionary and an integrator. But then every business kind of breaks down into sales and marketing as a function, operations as a function, and then finance or HR administration as a function. And so that's something that we're looking at and we're assessing to prospective partners. But then our current holdings is how are we developing diversity of names in those seats, right? So typically, whenever a company's at $1 million, 1.5 in revenue, they're the president, CEO, they're the salesperson, they're the project manager, they're doing the payroll. Maybe they start to hire some folks like yourself to help with marketing. They start to hire bookkeepers, things like that, but they really sit in those seats. And so the task is really how do you develop people? So bring talented people in, coach them, develop them so that you can have salespeople accomplishing the sales. You can have project managers, handling production and project coordinators, things like that. And so that org chart is a big piece. I think Nick Slavik likes to use this, like the turkey truck test.
Yeah.
Right. And so folks have probably heard that before, but if the owner gets hit by the turkey truck, does the business carry on, or is the business essentially over? And we try to decouple these businesses away from so that they can pass that turkey truck test.
Yeah. So just, I guess, backing up just a half step, do you have a revenue, like on the quantitative side, do you have a revenue number that you typically like to stay above when it comes to assessing a sale?
Meaning like from Aleph's standpoint?
Gross revenue of a painting company to make it at least worth looking at.
Oh, sure. I think for us, we're typically looking at $1 million to 1.5 is kind of the floor, I think, for us. And part of the reason for that is, I think if you survey the industry, $1 million to 1.5 in the residential space is typically where the capacity of an individual human breaks down. There are definitely some outliers and some studs out there that are doing $2 million and or more and they're kind of doing everything still.
You need a production manager or sales rep.
Right. If you're going to do more than $1 million or 1.5 in revenue, you can't do it all yourself. You're going to need a salesperson to either do the sales so that you can help produce through project management, or you hire a project manager that can produce the sales that you're going to get. And so for us, like with Aleph and what we offer help with, we help scale, build teams, provide that infrastructure for growing. That starts to be really applicable, at that, $1.5 million mark.
Gotcha. Okay. So going back to the qualitatives, the first one is the org chart, the state of the people. What does the team look like? Is it all on the owner, or do they have an integrator? If they're not following EOS, do they have a production manager? Do they have a sales rep? Do they have quality painters? Do they use subs?
Yeah.
What would be number 2 on the qualitative list of 5?
Yeah. Number 2 would be contribution margin or gross profit. And that for us, we define that as revenue minus the cost of labor, the cost of material, and then we put project management in there as well. So, what is our contribution margin or gross profit after we pay labor, paint, and project management? And at the end of the day, like this is an important thing to know in real time to be able to track, because this really tees up your business for everything else, right? If we internally we have a saying where we say, sales are for show, production's for dough, and it's like it doesn't matter if you sell $10 million very unprofitably, it doesn't really matter. Who cares? Right. And that's honestly a challenge a lot of times that folks run into with growing is, all right, if I hired a salesperson, or I hire a project manager, I got to be able to grow through that investment so that I'm profitable on the other side. And gross profit and being really tied into gross profit is where that really starts. And so because that's really just it's a temperature check on the efficiency of your production system, right? So do you know how to estimate? Is your bidding accurate, such that you're competitive, but you're bidding it in a way that is actually accounting for the realities of the labor market, the realities of your material, et cetera. And then when it comes to labor and material, are you managing those things well? Are you managing your labor to be efficient? Are you tracking your material spend so that that's efficient as well? And that
what percentage do you want to see
up.
gross profit at less labor, material, and production management?
Yeah, we shoot for at least 40%, and we like to be above that. But at least 40% again for us after labor, paint, material.
Right, and that 40%, so 60% cost, that should be enough to pay for the rest of overhead plus leave some profit left over for a holding company.
Yeah. I mean, and I think
not
just for, and not even just for that. I would just say for any owner,
for sure.
For the shareholders of a painting business.
Okay, so we got org chart. Say the people got gross profit. Around 40%. What would be number 3?
That would be success ratio, and so that's basically how many jobs are you selling for the number of bids that you provide, right?
Close rate.
Close rate. You got it. Yep.
Yeah.
And obviously, this is important. Your sales machine has to be efficient. You need to be selling at a good clip. So this one's pretty straightforward, and this is a good balance of, all right, is this what type of leads am I getting? You can evaluate all kinds of things through your close rate, that really helps ensure that your sales function is doing what it needs to do.
Okay. What do you have any other metrics that you look at other than close rate, like dollars booked per estimate or things like that?
So the next pillar here that we look at ties into this a little bit, which is cost on margin. So that gets into another factor here. But we'll definitely look at like average job size, things like that. That is going to be somewhat indicative of what brand of company that you're trying to build. Like what type of sector are you trying to specialize in, right? So if you're a residential repaint company that focuses on exterior, that's going to kind of dictate what your average job size should be ish, right? Or if you focus on interior, or if you're a commercial person and you niche down in industrial, it's like, well, those average job sizes are going to look different. It's important to know that, just so that you know that you're being competitive. But those are things that we look at as well.
Okay. And what do you mean by cost on margin?
Yeah, so your cost on margin is so your sales function needs to be efficient. So you need to be able to sell well. Cost on margin is, or your cost on gross profit is, you need to be able to sell well, but you can't overpay for those sales, right? So for example, like, just let's say, I would say, like, in our industry, success ratio, for example, we really target 45%. We want to coach somebody up to being 45%. And I would say too, different companies are going to measure, like, the numerator and denominator might be a little different. Like, this is book jobs on appointments that have been completed, and a proposal has been provided to a client, right? So for every time that you're doing that, we want to see close about 45% of those.
Okay.
Let's say you had a salesperson, like, let's say you had a $2 million painting company, and you had a salesperson who was closing at 60%. So they're doing very well. That's awesome. But if you're paying that salesperson $300,000 a year, that's not awesome for the company, right? Because you're paying too much, for that service. So cost on margin is a component. And so another reality is, let's say, you have a great salesperson and they have a market rate salary, and compensation structure, but you're paying, you're a $2 million painting company that you're paying, 300,000 for marketing. Well, that's not going to work either, right? So the cost on margin is basically, you take, how much are you, like, what's the compensation package for your salespeople? Like, what are you spending in compensation for your salespeople, plus what you're spending on marketing, and you take that and divide it by your gross profit, and so you're getting a percentage of cost on margin.
Okay.
And I'll just say this too, like, if anybody listening is interested in some of these, like, we have like a worksheet that we use for all this stuff. I know
Awesome.
there's some math and formulas in here. I'm happy to send this to anybody who would want to reach out. I'll give you my email, and
Okay.
you can kick that out in
Perfect.
notes and
Yeah, I'll
stuff like
put
that.
the email in the description underneath the podcast.
Yeah, happy to share this stuff.
So just to clarify that and just to say it in clear terms, so cost on margin is basically out of the and it'll be a percentage.
You got it. Yep.
So if you add up the cost of sales and the cost of marketing, so say over the course of a year, you spend $100,000 on your sales rep and $100,000 on marketing, and out of that you end up producing say $2 million. Okay.
Yep.
So that's 200,000 over $2 million, but that's on gross. So if you had that 40% gross margin, so that'd be $2 million at
$800,000 of gross profit.
So that'd be a 25% cost on margin.
You got it. Yep.
Okay. And is that a good ratio or a bad ratio?
So I would say, so for us, we target 25%. And I think, like, there's going to be seasons where this is going to fluctuate up and down. For instance, a newer sales rep, right? If they have a little bit less experience, their cost, like, their close rate might not be quite as high. So they're going to need more bids in order to hit a sales number, right? Well, if there's more bids, the company's going to have to spend more money to provide those bids, right? So a new sales rep, their cost on margin might be a little above that, but that's something that we track to say, okay, are we working that down? Same thing with marketing. Like, is your marketing very dialed in? Are you kind of spending a lot on marketing because it's not very dialed? There's a lot of waste in your marketing spend. And so your marketing dollars are inflated. Well, it's like, all right, we want to track our ROI on our marketing spend so that we can shrink that number, to a healthy mark as well. So, but 25% is what we target in our business model.
Okay. Gotcha.
And I think for that, right? So like with this, like with contribution margin, with success ratio, with cost on margin, no, like it's a very mature state that everybody's just flying colors in all these categories. So the goal is not to, the goal is to understand like where I need to focus. Like, where should my time and energy be? Like, where am I going to get the most bang for my buck in terms of what am I thinking about for my business? Where am I putting my energy? Right? Because you don't want to, put energy into something. I mean, for a business owner, that's everything, right? Like, you have to be so dialed in, with return on investment for your time, because your time has to go so many places. And that's one of the biggest challenges. So so that's really what this helps. It really gives you a to-do list of, all right, here's some things I got to work on in my business. So so number 4 there, cost on margin.
Okay. And last but not least, number 5.
Number 5 is net income. And so this more kind of brings everything together, right? So this is, net income is kind of a summary metric at the end of the day. They call it, it's the bottom line for a reason, right? So we look at that, and I think for us, again, this is going to, company to company, this is going to look different in terms of like, what does an owner want? So I think this is something that's just good to consider, right? So I think there are some, I don't know, I've heard owners say, their net income is 40%, 35%, something like that. Oftentimes what they're doing is they're factoring in, like maybe they're doing some sales and they're doing some project management, and they might not pay themselves a W-2. They might not pay themselves anything for that work. So then those dollars that, like, let's say they got injured, they got sick, and they needed to hire a salesperson, right? Well, their net income is not going to be 35% anymore if they have to pay a salesperson $100,000 to go get all that revenue, right? Or a project manager or whatnot. So it kind of depends on, as far as like what is a good number, it kind of depends on what you're trying to pursue. In our case, we're looking for stable passive income, and owners that partner with Aleph, that's what they're looking for as well. And so what stable passive income means is it's income. I'm not trading my time for money. I'm able to step away from the business. So Jason doesn't know anything that's going on in Paris painting day to day. And so, but for us, generally that percentage is going to be somewhere between 15 to 20% of net income. And so I think that's kind of a healthy mark. Now, you might make investment decisions, growing your team, hiring more salespeople, hiring more, marketing staff or things like that. You might make investments that are going to dip below that 4 seasons, but that 15 to 20% mark, if you can have a solid team that can really facilitate the work, that allows the owner to get into a more leadership position and a true integrator or visionary type, that 15 to 20% is a healthy mark.
Mm-hmm. Okay. So if we have, so just to now recap on the five items. So if someone wants to come in and work on improving their enterprise value, we have the org chart. So who are the people? Are they quality people? You didn't say it about scorecards, but I imagine you'd have everyone have scorecards and defined responsibilities, right?
Yeah, and that's kind of just a necessity of, if your team grows, you got to have that stuff, right?
Yeah. Okay. So then the second is your gross profit. So having your gross profit at least 40% if you have a production manager, but probably higher than that if you're just doing it yourself.
Yep.
Success ratio, close rate targeting 45%. One thing that I found interesting that probably most people don't realizes that little things can make a big impacts, and something like just becoming better at sales can potentially improve your enterprise value.
Oh yeah.
That's pretty curious,
For sure.
Cool. And then cost on margin. So we just defined that a little bit earlier. I won't define that again. And then finally having a healthy net income. Pretty much got that right?
Yes, sir. You got it.
So when you have a deal come to your desk, and you've been a part of, a half dozen painting company mergers and acquisitions here, which ones of these do you feel people usually struggle with the most?
Yeah, I think that the biggest struggle, and at the end of the day, I think what it kind of boils down to is that org structure. That's the most qualitative component, and that's the hardest one, is to build a team. Like if you're like most of the time, if you're an owner, and I always like with Jason and Chet, it's like, man, I was always jealous that Jason could go to a house and it's like his name was on the company. It's like if you're selling as an owner, I'm sorry, but there's just like a competitive advantage to that. If
For sure.
you're a non-owner, right? Because you can just speak with such conviction or whatever. So, but because of that, like most, and I would say, I talk to a lot of owners and have these conversations. If I were to generalize or kind of stereotype the typical owner, they're going to skew more to like a sales type of a person, more visionary, more sales, etc. So most of the time, like an owner is going to have a phenomenal success ratio. That's not too uncommon, but that is very different than like coaching and training someone else to have an excellent success ratio, right? So
Mhm.
same thing with contribution margin. It's like if you are an owner, like there's a certain authority that you bring to whenever you have labor conversations, whenever you are managing material, um, interacting with the client, etc. But if you're a project manager and you're having to do that, like that's just different. Like developing a project management team that can do that, that's a whole nother ball game. So I think that that org structure, that's the hardest piece.
Yeah.
And I think for Aleph, like I would argue that's our biggest value proposition is we know how to recruit, train, and manage performance on teams, and then we've built a team that can actually help be part of that team. But that's the hardest part.
Mm-hmm. What would be some of the most important things that someone listening here could do now in their business to start maximizing their org chart?
Yeah, uh, I would say take inventory of. I mean, just this is why the EOS is so helpful because it just gives you some simple tools to help put pen to paper to get this stuff down on in front of you, right? So I think so owners are oftentimes they're just running around so much, and so like slowing down, taking the time to like think about these things, um, and I like we walk folks um, through these different pillars, and we have this sheet that I'll fill out, and all right, the visionary, okay, that's the owner. Let's just say the owner's name is Joe. It's like who's the visionary? Joe. Who's the integrator? Joe. Who's the sales and marketing manager? Joe. 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 And it's helpful to see like, wow, my name is everywhere. And so I just think like realizing that helps you kind of take some steps to think about, okay, I have to make a plan. Like if I do what I've always done, I'm going to get what I've always gotten. And so you got to make a plan for building that. And then I think the next step is you need systems. Like what that necessitates is you mentioned like scorecards and those kinds of things. Like if you're going to grow your team, that necessitates a whole lot else, right? So if you're going to have other people do work in your business, you need to have standard operating procedures. You need to have playbooks. You need to have tools, so that you can take somebody that maybe they have the right soft skills, the right personality, experience that would lend them, towards success in a given role in your business. But they need guidance, they need help on like actually doing the task. And so, starting to do some of that work to, okay, what type of stuff do I do in my, if I'm going to hire a salesperson, I need to have a sales process. I can't really have a salesperson without a established written sales process. I can, but then there's not going to be really any real way to track that person's effectiveness. And I think even too, employees, if you go to the marketplace and you say, "Hey, come work for me," and somebody's coming to work for you and they don't have a job description, they don't have, a process to follow. There's not really clear metrics, like there's not really clear data so they can track whether or not they're being successful.
Just show up to
that's
this house, meet you on site, 8:30 on Monday, and let's go paint a project together.
Yeah, it's just not very motivating, I think, as an employee as well, right? Employees want to go to places where they can see their progress, they can get better at things, they can be successful, and then there's real data that validates and makes that success objective. So I think looking at, what's your data situation in your company? Are you tracking all these metrics? And then, how do you measure success in these roles? I think that's something to really work on, like yesterday. Yeah.
Yeah, 100%. And if people haven't read it already, I would highly recommend Traction by Gino Wickman. That's incredible book for anyone wanting to get started on how to implement, org charts and setting operating procedures and everything like that.
Yeah, absolutely.
So, how I want to, what I want to do here before the end is give you a hypothetical situation of a current client of mine. It's actually a real situation, but we'll pretend it's hypothetical. So, my friend has a painting company. He's had his painting company for about 20 years. He has had a production manager. Sometimes he does all of his own sales. He typically does, I think, between $600,000 and $700,000 a year. He wants to sell his business one day. So number one, how can he, in the short term, maximize his enterprise value? And then how do you identify a broker or a seller or buyer rather? And then how do you assess your offer? I know that's a huge, super packed question, but we'll break that down one by one.
Yeah. So, and I'm sure you're going to do a little editing here, potentially. So just that's something of, I'll just maybe say at the start that is a tough position to be in. So I'll just be honest with you. And I think that's why looking at this stuff early and often is so crucial. Because I think, there's a book that's awesome. We love it. Good to Great. And within that book, there is, Jim Collins identifies the Stockdale paradox. And the Stockdale paradox is this concept where, good to great businesses embrace the Stockdale paradox, which has two elements to it. One, unwavering faith that they will be successful in their endeavor. So they believe that they're going to be successful, they're going to accomplish their goals. But at the same time, they are unflinching and embracing the hard and brutal facts of their current reality, right? So their faith for future success does not make them naive to the realities of their current shortcomings and the things that they need to really work on. And their honest assessment of where they are today, they don't let that discourage them at the potential for their success in the future, right? So I think that there's an element of with owners sometimes it is owners just, I think, typically think their company is worth more than it is. I think that's something that if you talk to a lot of business brokers, they would probably tell you ad nauseum that their conversations typically, the price starts here and then it starts to work itself down, right? And to a degree, I'm not trying to like an owner. You shouldn't be an owner if you don't think that your company's great, if you don't think it's valuable, right? So that comes with the territory. But I think don't be like understand what truly drives value in your business, and from a data standpoint, and look at that. So I think if somebody is at uh, the point where they're trying to sell their business, and I don't know, yeah, if they're a little bit under $1 million, I do think that there is something about scaling before you sell that can be very advantageous, because I think you just got to look at what am I like, an honest answer to the question of like, what do I have to offer to a buyer? Like, what do they get out of purchasing my business, right? And if they just get a bunch of work to do, that's going to be far less appealing, right? So, um, and like a brand, like the phone just doesn't ring magically, right? So the more, but scale helps you in that, scale a lot. It opens up opportunities where you can start to diversify your marketing strategies. You can start to grow your team and start to diversify the work within the business, right? So then what that does is that flags to a buyer like, hey, there's like a system and a machine here, that is productive. Now it takes leadership, it takes management, it takes work, but there's some mechanism that is really in place here that a buyer can get into that situation, and then they can start to optimize, right? So maybe they see different opportunities, but I think to the degree, like you're just going to limit your buyer pool or your investor pool or whatever, um, towards somebody who you know uh, wants to is either already running a painting company or
Yeah.
that's all they want to do. It's going to be harder if they're going to have to come in, build everything, do everything.
So essentially, you want to really, at the point in which your company is worth something, is when your company no longer, or it doesn't necessarily not need you, but you're not doing everything. You have either a production manager or sales rep. You have, systems for bookkeeping, for marketing, for sales, and for production. You have responsible teams. You have healthy margins, healthy numbers, sales and marketing machine that will keep kind of going even if you got hit by a turkey truck.
Yeah,
And
yeah,
that, and then, and really only then is your business worth something to an investor.
yeah. And I think I'll be like, painting companies sell all the time, so it's like you'll find a buyer, but it's like you're going to limit, and you just might get yourself into a situation where yeah, you're gonna have to lower your price. Like it can just be tough, right? And again, I think thinking of, do you have a again, referencing a bunch of books here, Robert Kiyosaki, so the
Rich Dad
cash
Poor Dad.
flow quadrant, Rich Dad Poor Dad. So cash flow quadrant, the sequel to Rich Dad Poor Dad, he talks about these various quadrants that people can operate in. One of them being, or there's really a chasm between two categories, or between four, but two are on either side. And one is an employee or being self-employed. The other side is being a business owner and being an investor. And the difference between those categories is, are you trading your time for money, or is your system, your process, your people outside of you, outside of your direct time, what is actually earning income for you, right? So if somebody's doing all the sales, they're doing all the production, heck, maybe they're painting here and there, that like their income is directly tied to the number of hours that they put in the business. If their hours go down, their income goes down. If their hours go up, their income goes up, right? So to the degree that your business has that kind of correlation, there's intrinsically less value in it, because there's less value that can be transferred to somebody else, right?
Yeah.
But if it is your system that is actually making the income, if it's your team that's actually making the income, and then you can scale your team, you can scale your systems to create more income. Well, now you have something that holds value outside of you as a human, and that can transfer to a lot of different people. And so it just creates more opportunities for you as an owner, to get more passive. If hanging on to that business is what you want, or if you want to sell.
Yeah.
Yeah.
Crazy that it's funny. I think what happens often, and I'll be mindful of your time here, but what happens often, I think, is that when people finally put in the effort to get their business into a sellable state, they fall back in love with their business and realize that it doesn't have to be such a grind.
Well, and honestly, I think that's part of I think the reason for our strategy is like, I mean, yeah, if you can build these things, and there's no shortcuts. There's nothing but like work and showing up every day and consistency. Um, but like the trades and painting in particular, we firmly believe like it's a wonderful industry that rewards good, hard, smart work. And over time, you can build a great business that yeah can spit off great cash for shareholders, and you don't have to mess with going through a big transaction, and you're kind of banking on this transaction. It's like, oh, maybe you can get passive in the business, hold on to that equity.
Yeah. Now a cash
And
flow king for years to come.
yeah, pull a Jason Paris,
Awesome.
Yeah.
Well, Haakon, thank you so much, man. I learned a ton today. I hope everyone else did. My favorite thing is, what do I have to offer a buyer? That's so eye-opening, just that one sentence. But what is your email address if anyone wants to get that worksheet from you?
Yeah, so it's Haakon, my first name, Haakon, at Aleph, Aleph, dash mgmt.com.
Cool. I will put it in the description, and then I will get that worksheet. Thank you so much for being with me, man. Stoked to chat again. And yeah, I mean, I think you've given a lot of people some information on what they need to do to potentially have a sale one day. It's exciting.
Yeah, it's my full-time job to talk about this stuff and have these conversations, whether somebody's interested in Aleph as a strategic option to achieve success in some of these categories or not. I talk about this stuff all day, every day. So if anybody is interested, reach out. Like I said, I'm also happy to send this worksheet that we use to look at that stuff. Just kick me an email and I'll get that over to anybody who asks.
Perfect. Awesome. Thanks so much, Haakon. Have a good one, man.
Thanks, Mike.
Thanks for listening to the Painter Growth Podcast. If you want to grow your painting business, go to www.paintergrowth.com or click on the top link in the description. Talk soon.